I recently hosted a live workshop with my friend Mitchell Baldridge on the tax advantages of real estate. We cover bonus depreciation, cost segregation, 1031 exchanges, all the different ways that real estate and all the different things that make real estate the most tax efficient business in the world. So if you want to learn more about Mitchell and what he does, visit recostseg.com. And here is a replay of the workshop that we hosted a few weeks ago. Thanks for listening. Now, Mitchell, in order to qualify for these deductions and have them offset what's a separate, and I'm going to do my best to explain this as simply as possible, and then you correct me. For all intents and purposes, there's two types of income. I know there's more, but let's say there's two. There's active income, which is my job, my W-2, my primary business. And then there's passive income and passive losses. This is investments that I make outside of my primary business. I'm an angel investor in a venture fund. I own part of a company, but I don't operate that company. I buy real estate, but I'm not a real estate professional. These two different types of income cannot offset each other. So let's say I make 500 grand a year from my small business, which is my primary income. Let's say I'm not a real estate professional. I cannot use real estate losses to offset my active income. But if you are a real estate professional like me, because I spend more than 2,200 hours a year in real estate, and Mitchell, you pull up the actual boxes that we need to, or 750 hours a year.
750, more than half your time.
Then I can deduct this stuff to offset all income or active income. So you must be a real estate professional to offset W-2 income or active income with these real estate losses. It's a really important part of this whole thing.
Yeah. So yeah, and look, you said these two buckets of income, ordinary and passive. And yeah, that's right. So ordinary is I own a small business. I work in it every day. That's ordinary income. The other bucket is I have a W-2 job, and W-2 has this kind of further hurdle of excess business loss rules. So you can only take so many losses from your W-2, even if you are a real estate pro. And so, yeah, the real estate pro status is this huge unlock of 750 hours, more than half your time, and you materially participate in real estate. That means you can go start writing limited partner checks in or racking up huge losses and getting kind of tons of depreciation to go offset business income. Or, a lot of people, a lot of wealthy people have a lot of passive income that they just don't know what to do with, which is we all should be so lucky, but they love real estate. Yeah. You invest in a successful business a long time ago. So the other thing, it's important to distinguish passive versus portfolio. So interest and dividends and stuff like that are not passive income. So it gets even more complex.
We have a good question here. What if I am a real estate pro and I invest as an LP in deals? And we have another question up here. I'm a limited partner. I invest passively in deals. Can I benefit from depreciation? And the answer is absolutely yes. It all depends on how the documents are written and where the depreciation goes. But in most cases, yes, the depreciation passes right on to the investors. And this is something you should ask your sponsor. Send them an email. Hey, do I benefit from the depreciation? Did you get a cost seg study done? Can you let me know what our depreciation was year one?
Yeah, one thing we like working with deal syndicators, deal sponsors on at RE Costeg is helping them once they have an LOI under contract, giving them an idea of what the total depreciation is going to be for the building so that they can go advise their equity partners. Hey, if you put $100,000 check into this, you're going to get 35 to 55,000 of depreciation year one. Yep. That's how it's going to flow through.
Yeah, we do free proposals. So a lot of people lean on us to analyze deals, even if they're not, clear to close. Another question here is Michael says he's buying a building, $2 million plus, but it'll have some minor improvements. He says about $50,000 for tenant uplift and another $30K in the parking lot. So do I do the cost seg study before those renos or after those renos?
Email us sales@recostseg.com for your case. But I think what we would do for this is probably do the cost seg immediately. And then you would give us the kind of work orders for the renovations. And then we would kind of modify it at the very end to help you, because there's cost seg the whole thing, rip out a part of it, add in a new part of it, it gets a little complex, but
Yeah, and you don't want to
that
miss
works.
the year put in service too. So if you're trying to get K1s out by April 1st and
That's right.
some of your improvement projects are moving on and taking longer, you don't want to hold up the whole process. But yeah,
Yeah.
the answer is basically either one, but it depends on your timing with tax returns.
So one kind of aside to talk about with real estate pro status is the STR. Well, so one thing you mentioned was if I'm a real estate pro, can I deduct my LP checks? You should talk about aggregating material participation. Talk with your CPA about that. Another thing you mentioned or that we talk about is like STR operators or other small businesses.
When you say
I'm a
STR, short-term rental, nobody knows
short-term
what
rental.
STR
Yeah.
is. So.
Airbnb hosts
Yeah.
who own the property.
Or you have a vacation home up on the lake that you only get
Yeah.
to a certain amount of time and you rent it out all the time and it's actually an asset because you don't get there as much as you want. Those are like I cost segged my investment property that I bought up in upstate New York because I realized I was never going to go to it because my business took me elsewhere and it's full-time rental program. So I did a cost seg study on my second home.
Yeah, you rent it for less than 7 days on average and you spend less than 14 days there a year and all of a sudden it's a mini hotel. So but the big opportunity is this restaurant owner we're talking about out there who buys their own building. Well, they get to go take 200 grand and go get an SBA loan and go buy a building with pretty high leverage. And then they get to go take a lot of that depreciation against the business income that their business is generating out there. And they don't have to be real estate pros to do that because the real estate is incidental to the business. So if you're buying a warehouse or you're buying a house to serve as your office or any of that, you don't have to be a real estate pro to deduct that depreciation out there.
Yep, exactly right. And if you marry somebody who's a real estate pro, you get tax status for both. So Mitchell and I are definitely going to, at some point, build a dating service for real estate pros to be matched with high income earners.
Big news, guys. I created a free PDF that details my method on how I analyze a self-storage facility and figure out what it's worth. Give me a pen, the back of a napkin, and a couple metrics, and I can figure out about what the property is going to be worth to me. If you want to download this PDF, click in the show notes, the first link, and you can give me your email address and you get a email right away with 4-page PDF that outlines exactly how I think about underwriting or giving my initial analysis on a self-storage facility. Again, click the link in the show notes and you're going to get that document for free. This episode of The Nick Huber Show is brought to you by RE CostSeg. If you want to maximize your bonus depreciation and minimize your tax liability, make sure to do a cost segregation study on real estate you've recently acquired. RE CostSeg offers the lowest priced, fully engineered studies in the business, and you get a virtual site visit with a quick turnaround. They did 30 plus cost seg studies for me over the past year, including a short-term rental, along with my self-storage facilities. And I'm also an investor in the business, along with my good friend and CPA, Mitchell Baldridge, who you all know. To learn more about how bonus depreciation works, listen to episode 75 of The Nick Huber Show, or visit recostseg.com to go ahead and get a free proposal that outlines the cost of the study and your potential savings. Thanks again, recostseg.com.